Welcome back to the channel, everyone. In today's video, we are diving deep into Cardano ADA and breaking down everything you need to know about the current market situation, the price action, the technical indicators, and what could happen next in this highly volatile environment. So make sure you stick till the end because we are going to cover both the short-term risks and the bigger picture opportunity. And before we jump in here, this content is for educational and informational purposes only. This is not financial advice. Always do your own research before making any investment decisions, and I am not responsible for any profits or losses you make in the market. Crypto markets are highly volatile, and past performance does not guarantee future results. Now, let's get straight into it. Cardano ADA is a multi-chain platform that was designed as a more efficient and scalable alternative to Ethereum, and its founders, believed that Ethereum had certain limitations, especially when it came to scalability, user capacity, and network stability due to past forks that disrupted the system. So Cardano was built with a different philosophy by implementing a proof-of-stake protocol and introducing a peer-reviewed academic approach where every upgrade and change to the network is carefully researched and validated before deployment, aiming to create a more stable and sustainable blockchain ecosystem over the long term. However, despite these strong fundamentals, the price action is telling a very different story right now because ADA is currently struggling and trading below the 2.4 level after dropping around 5.5% last week. And when we look deeper into the data, we can see that there are mixed signals in the market, but with a clear, slight bearish bias, especially coming from the derivatives market, which often gives us insight into trader positioning and sentiment. And one of the key indicators here is the funding rate and open interest data, which is currently supporting a bearish outlook, because according to CoinGlass, the OI-weighted funding rate for Cardano has flipped negative and is sitting around minus 0.0093%, which essentially means that short sellers are paying long traders, indicating that the market is leaning towards downside expectations. And on top of that, the open interest, which represents the total number of outstanding derivative contracts, has been trending down since mid-January and is currently around $438.11 million, which tells us that investor participation is fading and traders are stepping back from the market, reducing liquidity and momentum. Now, when we move to the technical chart, things become even more clear, because ADA is currently trading around 236 and maintaining a strong bearish structure as it continues to stay below the 50-day, 100-day, and 200-day exponential moving averages. And these moving averages are stacked above the price, acting as dynamic resistance levels, which means every time price tries to move up, it is getting rejected, showing that sellers are still in control. And when we check momentum indicators, the relative strength index is sitting around 41, which is in weak territory, suggesting that there is still room for further downside before the asset becomes oversold. And at the same time, the MACD indicator has slightly slipped below the zero line, which confirms that bearish momentum is still present, even though the selling pressure is not extremely aggressive at the moment. Now, if we look at key resistance levels on the upside, the first level to watch is around 224.5 cents, which has acted as a horizontal barrier before, followed by the 50-day EMA near 26.4, and then the 23.6% Fibonacci retracement level around 269. And if the price manages to break above these levels, then the next major resistance zone comes in around 299, where we see a strong confluence of resistance, including a horizontal cap, the 38.2% Fibonacci retracement level, and the 100-day EMA near 35, and beyond. That the higher Fibonacci levels, along with the 200-day EMA around 399s, create a much broader resistance ceiling that ADA would need significant bullish momentum to break through. But right now, the bigger driver of the market is not just Cardano itself, but the overall crypto market, and especially Bitcoin, because Bitcoin recently dropped from $91,000 to $72,000 in just 2 weeks, which is a massive correction. And this has pushed the fear and greed index down to 15, which is considered extreme fear and the lowest level we have seen since the 2022 bear market bottom. And as expected, ADA has been moving almost in sync with Bitcoin trading near 25 cents, as altcoins continue to absorb the broader sell-off with very little differentiation. And this is where the narrative shifts, because during bullish times we talk about catalysts and growth. But in fear-driven markets, the focus shifts towards survival and capital preservation, even though development on Cardano continues with Protocol 11 progress and large whale wallets holding around 819 million ADA have not sold their positions. The reality is that price action often ignores fundamentals during periods of extreme fear because market structure is dominated by sentiment and liquidity. However, it is also important to understand that historically, periods of extreme fear have often been followed by strong recoveries, especially for projects that continue building and innovating, although the timing of these recoveries is always uncertain and can take longer than expected. Another important factor to consider is correlation, because ADA currently has a very high correlation with Bitcoin, above 0.85 during sharp drawdowns, which means that when Bitcoin drops, Cardano tends to follow almost equally. And this makes it difficult for ADA to recover independently. And currently, the price around 25 cents represents a massive decline of about 72% from its all-time high, which shows how much pressure the asset has been under. And according to some projections, like there was an expectation for ADA to reach around 0.38 cents in Q2, which would represent a significant upside, but that projection was based on Bitcoin holding above $85,000, and now, with Bitcoin below $75,000 and fear levels extremely high, that outlook is facing serious challenges. So for ADA to deliver strong returns from current levels, it would require both a recovery in Bitcoin and strong Cardano-specific catalysts happening at the same time. And this dual dependency reduces the probability of a quick recovery, because both conditions need to align perfectly, which historically does not happen very often or on a predictable timeline. Meanwhile, there are new concepts emerging in the market like T4 Urox.io, which is positioned as a decentralized hedge fund where AI agents trade pooled capital across multiple exchanges and assets, aiming to generate returns regardless of whether the market is going up or down. And the idea here is that instead of relying on a single asset like Bitcoin or Cardano to move in your favor, these systems attempt to capture volatility in both directions and distribute profits to participants, with claims that stakers can receive up to 80% of net trading profits once the system is active. And according to the data shared, the pre-sale phases have been progressing, with Phase 1 at 0.1, Phase 2 at 0.12, Phase 3 at 0.15 Pfeffers, all selling out, and Phase 4 currently at 0.18, raising over $1,000, even while Bitcoin is trading significantly below its recent highs. And this kind of demand during a fear-driven market suggests that some investors are still willing to take calculated risks and position themselves early for potential upside, with early participants already seeing paper gains as pricing increases through each phase. And the model focuses on generating returns through trading performance rather than relying purely on price. Appreciation of a single asset, which is a different approach compared to traditional crypto investments. However, it is important to understand that all such opportunities come with their own risks and uncertainties, especially in early-stage projects. So careful research is always necessary. And bringing the focus back to Cardano, the key takeaway here is that ADA's price prediction is heavily dependent on external factors, including Bitcoin's direction, overall market sentiment, and macroeconomic conditions. And while there is potential upside if the market recovers, the current environment of fear and declining participation suggests that downside risks are still present in the short term. So traders and investors need to stay cautious, manage risk properly, and avoid emotional decisions. And if you found this breakdown helpful, Make sure to like this video and subscribe to the channel for more real-time market updates, trading insights, and in-depth analysis so you never miss the next big move in the crypto market.